Hello everybody, hope that you're doing very well and welcome to this evening's Contenders live stream, being the 18th of December, nearly Christmas time. So I hope that you thoroughly all enjoy this one. Where I think we've got, some really, really good content in my opinion. So I hope that you thoroughly enjoy and learn from this one. Oh no, that is bad. That is my echo. Wow, okay. At least I know the volume's working. Apologies about that. Right, with the echo gone. Tonight we're going to be running through Theta chart of the week, and then obviously what I never got to last week, which is selecting which pivots to pull from, and I've run it in a way. The way that I've designed this is because people enjoyed me, asking questions during the stream of like, okay, think what to do next. So I've laid out the pivots to select in a way where it's kind of, I'll ask the question, okay, give you a few seconds, and then reveal the answer. People enjoyed that when I done it last time, so I thought I'd run with that again today with the pivot selection. And then I want to run on to some Gann retracement levels, and I think you're all going to really love the Gann retracement levels because it's going to unravel some of the mysteries and secrets, I guess, of why I've been selecting the 0.66 fib. And actually, as you all know, the Champions channel that I run now is from 618 to 66. And today you're going to discover, what led me towards testing the 66. I guess it is a Gann's retracement level. So yeah, we're going to be going through some Gann retracement levels. The thing is with the Gann retracement, as I will mention as I get to the slides, I guess, but you'll probably likely never have seen me using it publicly before. But they are very, very useful, and I do use them in my own time. But we'll get to that in a second. In half an hour probably. And then I just want to note that the streams of the next 2 weeks are obviously being Wednesday the 25th and Wednesday the 1st. I'm not going to be doing a live stream on Christmas Day and New Year's Day. So I'm thinking right now, maybe change, but 2 days later. So instead of Christmas Day, be the 27th, because I don't think I don't want to do it on Christmas Day. I'm sure no one's going to really watch it on Christmas Day anyway. And then on the 1st, being New Year's Day, I'll move that to the 3rd as well, okay? Because, I'm not going to be doing this on the 25th or the 1st, or hopefully not. I'll be with my family, so that's how I'll be spending that. Let's I'll cover that again at the end. But yeah, let's move on today. We've actually got a lot of stuff to get through, if we're honest here. Bitcoin obviously still moving up at the moment, okay? So I kind of would like to not concentrate too much on Bitcoin, but I'm aware that we're currently getting this move to the upside, okay? So, Theta chart of the week. I think this is a really, really interesting one today because of some of the... Well, I just think it was a brilliant setup, if I'm honest. So I want to go through Theta to begin with, okay? So this was... Let's load up the chart simultaneously as well. So Theta. Okay, so this was obviously one that I gave as... Well, if you're in the Champions group, you'll be aware of this one. Because in the Champions group, I gave this as a trade of the week setup. So obviously trade of the week is where I'm giving the exact entry, stop loss and target, before it happens, sort of thing. So this was a Champions trade of the week, right down at the low of the range being the monthly, and it was aiming up to the top monthly, and this ended a 30% gain to the upside. So I've already banked 30% of this, as well as any of the champions that traded trade of the week with me, banked 30% on that one. Okay, but obviously exceeded expectations, as with many things in crypto. You go up to monthly, and you can say it definitely wasn't a bad target because we spent a good 2 days, banging at the level. But this is the thing: hit the level, low, hit the level, higher low, hit the level again, 3 times hitting it, you broke through it, haven't you? Okay, so that is a bit of consolidation under resistance. You also got the really, really clear resistance support flip, so a lot of reasons of why you could envision this breaking through. Obviously, I closed out of all my Theta though, so I was out totally of my Theta at that monthly resistance, and I was eager to get back in after I saw it close above, exactly the same way that I was trading Atom. Okay, Atom, a very similar setup. Obviously, that was another 30% gain on trade of the week, but on the same sort of similar circumstances, Atom broke through its weekly and then back tested it, and it continued to rise. Okay, so this is really similar in my opinion to Atom. Both of them, two of my favorite altcoins at the moment. But yeah, this one is obviously a little bit different, so let's zoom in here and go through what my thinking was as I gave this as chart of the week yesterday. For this is an educational one, not a call, obviously. So what I was looking at here, as kind of described, was was a day trade. Okay, so it was a day trade for me. You know, some of these day trades obviously can, if I'm not getting stopped, then I'll let them run. There's no need to close out of this early. Okay, but was in the time being a day trade. Okay, so obviously we're hitting that resistance of the monthly, broken through the monthly. Okay, so broken through the monthly resistance, buying with strength, you know, hoping for continuation during the day, which it did get. So very short term trade, thinking one, you know, really one day, but it has ended up going on to two. Stop loss placed at a key level support, which is the, as you'll notice today, the 50% Gann level, okay, plus two higher lows back. So we got three confluences of why I've selected this as my stop loss. Stop loss being 1381. Okay, so 1381 was the stop loss I decided, and I really like this setup that I've given today. You know, last week where I done link by one sat, okay, and obviously missed link by literally one sat because of my buy wall, but I obviously missed it by one sat, and today I nailed the stop loss by one sat. And so this is the strong confluence that was clearly there. Okay, so I had three levels of confluence of why I've selected this stop loss. It's two higher lows back on the 3-minute chart, obviously day traders chart, two higher lows back. Okay, it's the 50% Gann level, okay, and it's also just a key level, the first high of the wick, okay. I'll go through it in a second on a lower degree, but yeah, I'm going to show you in a minute of why I selected 1381 as the stop, and I think you're going to be highly amazed, to be honest with you. So what we can see here, sorry. What we can see is I was trading at around this point, and obviously we did get another few percent to the upside. So I entered, it got a few percent to the upside. We're going to need to drop down time frame, okay. So I did enter, we got a few percent up, you know, upwards rise, but ultimately come back down, tested monthly again, moved to the upside. Okay, and you can actually see earlier we did back tested monthly again and are continuing to rise. So I am still in a long on this, by the way, and I think it's looking nice. But let me show you of why 1381. I must admit, I'll be very honest, there was a mental stop loss, so I didn't actually have anything in the books at this level, but nevertheless that was the level I was going to get out at if this level was lost, just so you are aware of this as well, by the way. So let's go through it, speeding up of why this is a key level. So you can see here it was the, you know, move up through monthly. So through our first monthly, this was the move up through the monthly, moving up through the monthly. That was the first high created, okay, before you entered a longer period of consolidation. Okay, so this was our first high. Not just that, but then it's the SR levels that you get off of it. Okay, so it was the resistance, and you see again really clearly big wick. You know, these are big percentage moves, 4% to the upside, nearly 5%. Again, wick to the exact dollar, coming down through it slightly here, but then you see on these two wicks, you know, to the exact sat, wicks, then you're seeing it come into a bit of support again. Zooming in here, wick of support to the exact sat, then you're seeing again resistance. So it's really clear to say that this is a key level. Okay, so we firstly had the key level there. Okay, on top of the key level, okay, we also had a 50% retracement, just that's really simply from low to high, but that's just a 50% retracement. Okay, and on top of that, it was two higher lows back. So obviously where I was trading it, entering around here, okay, one higher low, two higher lows. As you know, the way I like to use my stop losses, two higher lows back. So we did have that with one higher low here and two higher lows here. Higher lows, lower highs. Yeah. Sorry, my mind went really weird then. Two lower highs. Okay, so that's, oh my god, my mind is going really blank, really blank right now. But yeah, two higher high, higher low. Yeah, higher lows back. Sorry, my mind was really going weird then. Two higher lows back. So yeah, that was the confluence. Sorry about that. That was the confluence of why I selected that exact level. And I think this is the amazing part about the setup. Okay, this is the amazing part about the setup. If I zoom out here slightly, that you can see that the low, okay, the low that was so close to stopping me out, if I'm honest, well, it was a mental stop, but nevertheless, what I was looking to close out was the low was 1382. Okay, so obviously I had in, you know, I was looking at 1381, and the exact low was 1382 by one sat. Okay, essentially saving my bacon. So that was, you know, pretty nice, if I'm honest. Okay, and that leads us on to how I traded it for the rest of the time. Okay, so this is how I woke up to it this morning. Okay, so this is about 10:45 a.m. Yeah, I had a bit of a line. So what we can see is from low up to the high. What I've done here is connect. Well, this is obviously live, sort of in the time of how I'm looking at it. in this form of a parallel channel. You can see it struggling with the highs, and it just hit the high and got a retracement. Okay, so me being a conservative trader, also very aware of how I was trading Bitcoin. And if you were active in the Champions group this morning, I was trading it short this morning. Okay, obviously it went through a major swing failure pattern, so we had extreme volatility on Bitcoin. Okay, we're talking extreme volatility to the downside and then to the upside. Alts are not going to like this in the moment. They're going to, very likely to pull back. I always say that I trade the altcoin for its setup, but I do have the intuition to know when there's a big move likely on Bitcoin, and know to at least play conservative on alts while I'm expecting a big move. So that was partially some of the reason why I locked in 50% here. But the other reason was simply, we are hitting actually a valid resistance level of the parallel channel. We could very easily pull back, to the midpoint. I wasn't expecting a full-on drop like it got back to the monthly, but can't complain because at the end of the day it still recovered again. But that was the reasonings, so you can fully understand of why I was locking in 50% of this trade. So this is about 5% gain, by the way, and I'm only after 15%, so it was also like 1/3 of the trade. It's a decent gain, if we're honest, for a day long trade, 5% anyway. But so obviously this morning when I was waking up, that was my reasonings for taking 50%. And now I'd like to go through what happened, afterwards. So obviously this is where I was taking 50%, and coinciding with Bitcoin, Theta moved directly down, and this is about a 7% move to the downside, so pretty big move to the downside, and bounced off the monthly. So for me, having taken 50% off of the top, if I hadn't of locked in profits, I wouldn't have actually compounded myself. I wouldn't have done it again because I just wouldn't have. But because I compounded 50% at the top, I did add it back in, seeing that we were bouncing off the monthly. I didn't have an order set there to compound back in, but after the bounce had happened, I did compound it back in, and we obviously very nicely did get, and still continuing now, movement to the upside. And what I've actually done is move my stop loss up to the monthly level now. Just there's no need for me to have such a wide stop loss anymore, in my opinion. We can look at Theta now. The stop loss for me has moved up just below those wicks slightly. That's my new stop loss. Still continuing to trade this, and I'm still looking for around the weekly. This might take a little bit longer. I guess it could not happen. What we have to be aware of is, in particular, this resistance trend line that we can see could be a factor of coming in. And if we take it from the closes, okay, this is obviously, you have to look at the time frame that I'm looking at here. Okay, this one's not so good actually. So if we just stick with this trend line, okay, we are going to be heading up to it most likely in the coming. What is this? I can't see the time. Few hours, okay, before the daily close. We should be running into that, so just be aware of this one. If we actually extend this a little bit on, we are currently, now I can see this fully grinding along the midpoint of the channel as well. So this is also a resistance. Clearly this is a resistance that we are up against right now. But yeah, I am still in this trade, so just so you are aware of that, and still looking for this weekly. Cool. Bitcoin moving up. Great. That's what I wanted to cover with Theta. Let me just make sure. Yes, that. Oh, right. So major. So let me go through then this Theta really quickly then. So what are you on about? Major high to major low. This one here to this one here. We're seeing the 618 now. Oh, very close to. Well, you got to be aware of this level. Everyone has to be aware of that level, okay? Of what we're hitting or what we could run into shortly. But I guess you're on about this one. Okay, so we worked off of it earlier. Again, another level we have to be aware of. Those are your sort of mid and shorter term resistances on Theta. Look at Bitcoin go. This is nice. Right, I don't really want to concentrate. I get distracted by Bitcoin. So let's try and move on. Okay, to the next slide. And this is briefly I want to cover, obviously last week when I was looking at the 0.5 Fibonacci levels. Okay, I want to go through the 0.5 Fibonacci levels and give you an update of what has occurred on waves. So as you all know, this was just check last week's stream. I went over it in detail, going through waves, and obviously the reaction that's happened on this one. is coming on to 100% gain in 1 week. So absolutely crazy. I'm not sure whether I helped people come into this, but yeah, absolutely crazy the gain that Waves has had, if we're honest, and that has all stemmed from what I was going through last week. We're just seeing it pull back a little bit now, but if we come out to a higher term time frame, let me show you some of the ways that you could have got into this. If this is confusing for you, literally just watch last week's stream. What we can see is on the way down, we're obviously coming down in our 0.5 fibs, respect along each fib. Okay, where have I got this marked out as a, because obviously I was trading it lower down. But look at this. So you can see here didn't try and move that. So the zero level. Okay, so what does the zero level represent? It represents from our first high down to where I was selecting our first low. Okay, so that was meant to be here. That from our first low. Okay, from the high down to the first low, it all stems from, from that zero level. Okay, and obviously the zero level was the first area of support, and you can see the SR that you had on this line. Okay, in terms of support, flipping into resistance, and that was the last area of resistance before a major move, obviously to the downside, all contained within that channel. Again, you all know this because I covered it last week, but obviously contained within that channel, eventually coming down to the negative 2.5, which was also the bottom of the channel. Okay, from the bottom of the channel, we obviously have expanded to the upside, come down, come back up, come down, come back up, come back down. If you take a fib, just a standard fib from low to high, that was also the 618. So you had the key level being the old support and resistance also being the zero, also with confluence of the 618. You did expand from the upside to that. Okay, so even if you got into it a bit later, then even from that 618, it done another 60%, which is so crazy. But yeah, I wanted to just give that update on Waves because I don't feel there was. I think you're going to find it really, really hard to find anybody in the whole of crypto that was interested in trading this last week when it was at 766 sats, and now you're going to see everybody full on shilling it. Now we're sat at 1,200 sats, nearly this 100% rise. But I was monitoring and trading this right down at the bottom, so it feels good. So I just need to take a drink. Sorry, I had something in my throat. Cool. So yeah, that was just an update of how honestly well that went. So right, moving on to the next section that I want to cover tonight, and that is selecting the pivots to pull from. Okay, so like I've wrote here, the trick with Fibonacci is selecting the correct pivots to pull from. If you are only pulling from the overall high to overall low, or overall low to overall high every time, what you're going to find is the trade is naturally going to be very crowded. And what do I mean by very crowded? If you're going from low to high every single time, it's such an obvious level that it possibly may be crowded. What you'll notice is that for a lot of my trades, I'm not saying all of them because I'm 100% still doing this pull on the trades, I'm not forgetting that one, but what you'll notice is especially when day trading. Okay, so I'd say it's more day trading than swing trading, if I'm honest. But when I'm day trading, when I'm down on the 1, 3, 5 minute charts, you notice my pulls are not standard. Okay, so I'm not pulling from overall lows to overall highs while day trading. Okay, I'd definitely say it's more factored towards this. But yeah, you don't just want to be picking one pivot and one pivot low and one pivot high. And so what I have here is a selection of questions, and then I'll give you the answer. Okay, of where you can be pulling from, and hopefully it will just bring something into your mind of, okay, so let's start selecting some other pivots. And I know a lot of you already have this locked down, but obviously not everybody. So yeah, I love to select and pull from not so obvious pivots that many would miss. And today just had an example from that. So this is literally just today on trading Bitcoin. Okay, you can see like 1 minute chart, so it is very much day traders chart. But this was this was a long trade that I took today on Bitcoin. Okay, so scalping to the long side from the .382 Fibonacci level, which is obviously an aggressive level to be longing from. Some people are going to be waiting for the 618, for example, but when you are aggressively trading, you want to get in higher up because I guess you're not expecting the lower pullbacks. You can also see it was a bit of an area of prior supports. So yeah, I actually didn't long it to itself, but nevertheless I entered slightly above it after it got a little bit of a bounce. So I had my confluence there for the long, and obviously this was all posted in the group and and in the time as well. And obviously this went from entering the long and then very shortly after coming up to the top of the channel. And then very shortly after, well, this retraced a little bit lower, but nevertheless, that was when. Yeah, what I wanted to show is just just a random live example from today, where I would argue that not many people are going to have selected this low to high. I'm not sure. Maybe people are going to be selecting this low, the overall low, maybe intra pivot lows. But this is like a live example of why, where I pulled a pivot low to pivot high from today. Okay, so that was just a random live example, and I want to go over to some questions. Okay, so this is an example from basic attention token. Okay, so think to yourself, price is rising here. Okay, we can see price. Let me try and hide it. So we can see price slightly rising here. So let's just say, for the sake of an example, we're waiting for price to rise to, let's say we can short this. We're looking to short to play it back down. Okay, where are you pulling your fibs from? Are you going to be taking it maybe from this high, this high, this high, or this high? Okay, so let's just say pivot 1, 2, 3, or 4. Which pivots or pivot are you taking your Fibonacci levels from? And I'll give you 5 seconds, and then I'll show you the answer. Okay, so I would say you're going to have 2 Fibonacci's on this chart, because I would always have one at the very top. Okay, so you're not going to go wrong with having from overall high to overall low. You're not going to be incorrect by selecting this one. But I think for an intraday sort of day trader's perspective, at the very least, you are going to be wanting to pull from this high. Why this high? Because this is the last high where price broke down. Okay, so obviously price is breaking down here and here and here, but this was the last high prior to the breakdown. So Crypto King right with number 1. Yes, this is the pivot that I would definitely be selecting first for myself, from high down to the low. This is the high that led to the breakdown. This is where we're going to be pulling a fib from. Okay, and you can see in the example that follows, that was the high that led to the breakdown. Price comes up to, again, the champion's channel before falling down. Okay, so what we could do, okay, just for an example, let's say price, okay, let's do an example. Let's say price, if it did done this and got through that level, then what we would do is move 1 pivot back. So then we could pull from this high to this low. Okay, because you work back a pivot. So if you get through this high to low, if you get through it, then go back another pivot, and then you'll obviously have a higher 618. If you get through that pivot, then you can go back another pivot and draw again. And if it gets through that, then you have the last pivot high to pivot low. If you get through that, then I would say you've got through all the major 618 resistances. Okay, you could, you're out of Fibonacci resistances on that time frame, yeah. And so you break through a lot of resistances. It's looking very bullish. Okay, but yeah, I would always start from this pivot high to this pivot low. So another one here, and this is on Komodo. Okay, so Komodo, again, we'll envision that we're expecting a move up to go down. Okay, so let's say pivot 1, 2, 3, or 4. I guess the answer is becoming a bit more obvious. I guess it's probably going to be a bit obvious. But yeah, so, well, this one actually is a little bit different. So you can see here, I did say 1, 2, 3, or 4. If you had said 1, this one here, well, it'd be incorrect. So the reason why you'd be incorrect, because if we envisioned that we had said 1 here and we had pulled a Fibonacci from here to here, price is going to have got through all your fib levels, because you're high. Well, you might have the 886, but nevertheless it's got through them. It's already broke through all the major resistances here, hasn't it? Let's say your 0.5 was here, your 618 was here, your 786 is here. From this high to this low, you're already through all the resistances. There's no need to have that fib pull. So your next highest one is going to be this one, isn't it? From high down to this low. Okay, so what, like I said here, if we had pulled from here to here, as we break through the major resistance levels, let's say 0.5, 618 and 786, once you break through that, okay, remove this pivot and let's move back from the next high. Okay, that's the way I work it. And then you will see, oops, didn't try and do that. And then you will see from the next pivot high to the next pivot low. Well, price is stuttering here, isn't it? I can't remember offhand actually whether Komodo, well, I think it dumped like every other alt, so this did move down. But you know, you can see the resistances that are coming on here off of the Champions channel, and again 0.6 to the exact sat on this one. But yeah, again, that's the way that you're going to work back through pivots. Okay, so I have another one here. So this is ZRX. Which pivots are you selecting? Let's say 1, 2, 3, and 4. Sorry, I had to cough. So I'll give you a few minutes. I see people answering. So pivot 1, pivot 1, pivot 2, pivot 3, or the high of pivot 4. Which 1, 2, 3, or 4 are you pulling from on ZRX here? Where are you going to have your fibs? Graham says super helpful. Thank you. I think this, yeah, I do enjoy doing this way of teaching because I can see how it's like more interactive, gets people like thinking, hopefully a bit more in tune, because I know that some of these live streams do last a few hours, so yeah, it's good to keep people zoomed in. So we got some answers for 3, so this one, and we got another answer for 2. Let's go through and I'll show you. Okay, so this one is a little bit zoomed in, so this was a bit of a cheap one, I guess. So this is obviously the 4-hour chart. Okay, while I'm looking here, this is the 4-hour chart, and what I've done in here is zoom in onto the 15-minute chart. Okay, so a little bit of a cheat. But what I've done here is when I've zoomed in, okay, it's the pivot from 3160. So you can see 3160 is number 1. Okay, so I have gone from number 1 pivot. Okay, because, well, when you zoom in here, from that pivot high down to the pivot low, you have come up to the 618 here and broke down. Obviously, so this is another way that I can try and explain this. Okay, obviously we can see here from the breakdown, let me fully explain this. We're taking the fibs, although there's obviously higher highs here where we could pull our fib from, you know, we could have a fib from here down to the low, for example. But the reason why you take the fib from here is this is where the breakdown happened. Okay, so you can see this is where price got impulsive to the downside. So from that pivot high to that pivot low, okay, you can see price again. This is like price coming up and, you know, getting the retracement. If price does this, you know, actually, you know, so this is a scalp trade. That's going to be a, you know, a percent trade right there. But let's say then you go from the other way, from low up to the high. Price retraces down to this 618 and bounces and gets support and goes through. As you go through here, you have to remember that the people that are selling here, you know, just like I would trade this like this. So I would, you know, for instance, if I could short this, short here, and then long it on the next 618, and you will sculpt the 618. So they, you know, how many times have I given that as an example? But you know, as you come down and you do this, if you break through that pivot, then we could go to the next, you know, pivot back, take a fib from here down to here, and maybe then we have our 618 lining up here, where we could then trade it again like this and keep working up. Obviously that gives you your bullish market structure, and if it's bullish, it can be maintained within a channel like this, and you can be battling from 6. So for example, let me try and explain this fully because it's how I do a lot of my trades. So if, let's say, we do end up moving up like this in a channel, okay, and here from low to high, we've pulled back to the 618 after getting rejected from the 618. From our next rise, let's say we go from pivot high to pivot low, that 618 lands at the highs here again. Okay, and then let's say we come down for a rejection, and then from then our pivot low to our pivot high, we have another retracement to the 618, which coincides with the bottom of the channel. We move up again, and let's say this is from this pivot high to this pivot low. Our 618, for an example, is coming in here. That gives us our high of the channel. We get our move down again, and the same continues, pivot low to pivot high, come down to the 618. You know, obviously it's not always going to be so, it's not going to be so picture perfect like this. You're going to see, you know, you're going to see things like this: wicks slightly above, wicks slightly above, wicks slightly below, you know, coming down, partial rises, partial declines, so it might not quite touch the bottom before you head back up. You know, this is trading, it's not picture perfect as in this example. So you're going to see wicks through, you're going to see partial declines, partial rises. So don't think it's going to be so picture perfect 618 every time, but you know, a lot of the time you can see that. But that's how we we use other confluences to, just like I done today. So just like I done today, off of this long trade that I took. This is obviously looking for a partial decline. It's not come down to the bottom of the channel, and I'm using the 382 Fibonacci. So this is obviously just to really highlight, it's not always going to be the 618. That's all I wanted to mention there. So I hope that has been helpful. Cool. Cool. So what I want to go through, if you found that helpful, or you think you need some more practice, then I can do some more of these, but that's enough for today, I think. What I want to go through primarily was the Gann retracement levels. So I guess what I have to mention first, before I let's keep it on this screen to not distract you, so you don't try and read ahead. What you have to think with Gann is obviously a knowledgeable trader, and he likes to focus on not just the price axis. So you're not just focused so much on price when it does come to Gann theory. You're also focusing on time and the angles of the angle of the decline or rise is obviously, that's a lot of his theory is all about the angles, but it's also about the time. So it's a lot different than standard trading, where everybody just looks at the price axis and nothing else. Gann theory does incorporate, so for example, we would have a 45 from the high to the low. We could have a 45-degree angle up here, and we would be saying, okay, if we can stay around this 45-degree angle, then it's a nice steady uptrend. You move too far away up and down, then the uptrend is either too fast or too slow. But that's kind of this is how he runs off of his angles. Okay, and then you also, let's just clear this up a second, you also then can have Gann squares, for an example, and this is going to be helping you in terms of time. So you can see our time segments here. As price reaches a certain time, then you can expect reactions in the chart. Okay, so Gann does use there's some stuff I haven't mentioned there with obviously his fans and things, but nevertheless, it's not just focused on one axis. This is a lot of how Gann works. Okay, so just be aware of this. But today I am focused, after saying that, I am going to be focused on the price segment of his theory tonight. Okay, and obviously I can get into the whole load of Gann theory on another video, but today focused on the I've done it under the Fibonacci section, because you do use the Fibonacci retracement for this tool. Okay, so I'm just going to read through this. So Gann had retracement levels in eighths, so he was very much focused on eighths and thirds. Okay, so 1/8, 1/8, 2/8, 3/8, 4/8, eighths, and also thirds, obviously being 1/3 and 2/3. So converting these fractions, okay, to percentages, we have, well, you can read it here: 12.5, 25, 33, 37, 50, 62, 66, 75, 87, and obviously 100%. For Gann, 50% was the most important level. He had a very big focus on halves. Okay, so get a number, half it, half it, half it, half it, sort of thing. So 50% for himself. Not for me so much, but for himself was the biggest retracement level. You just have to look at many other theories, Dow theory, etc., 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 and a lot of people place a lot of importance on the 50%. Obviously, I would say I place more importance on the 66%, but many traders back in the day, I guess, were more focused on the 50%, and obviously Gann is from back in the day, old trader. So Gann placed great importance on time, price, and angles. I've listed some of the angles here, but we're not going to be covering that today. Today we are going to be looking at retracement levels. Okay, so let's say, for an example, just to make this very clear, if we have a move of $100, okay, then Gann would be interested in, for example, 33%. Okay, so that's obviously 1/3 of the move, so 33%, 50%, etc. Okay, so these are the percentages that he would be interested in getting a trade from. This is where I got the idea of testing the 6/6, obviously being 2/3. Okay, 1/3 33%, 2/3 being 66%, so 0.66. You're going to see, obviously I've read a lot of Gann books, and in Gann books they actually say 67%, okay, because this is obviously 0.66666666 recurring. So you're going to see in books they'll actually say 0.67, or all the ones I've read anyway on Gann is all 0.67, okay. But yeah, as you all know, I instead of going 0.66666666 and rounding it to 0.67, I've obviously gone for 0.66 with a Champions channel, and I'm going to use that today and teach this. So using the 0.66 percentage of the Champions channel, when I was looking at Gann levels. As I mentioned at the start of this video, I really don't think I've ever used this tool publicly. Obviously, when I've gone through my tools and the templates in the past, I've shown you this, but I've never publicly used this tool. It's not something I generally only show Fibonacci work when I do my public stuff. So, but yeah, it is really powerful tool. Okay, and I do use it, I would say, more so in the stock market, but nevertheless, it works on crypto as well. You're going to see a lot of confluences. The main numbers here are also Fibonacci numbers, so you're going to see confluences between the two. But obviously, there's more Gann numbers than there are Fibs. But yeah, there's a lot of confluences overlapping, so just be aware of that as well. But yeah, these are the levels that you will be looking at. So as you can see here, I've got 0.125, 25, 375, 05, 625, 75, 875, 33 and 66. So where have we got those numbers from? Let's say we got a move, and obviously that move is 100%. Okay, 1/8 of the move is 0.125, 2/8 obviously 0.25, 3/8 375, 4, 5, 6, 7/8 being 0.875. Okay, where have I got these two from? As remember, Gann like to work in thirds. 1/3 of the move is obviously 0.33, and 2/3 is obviously of the move is obviously going to be 0.66. Again, in books, this is going to say 0.67 because they round up, because it's 6666666. They'll round it to 67. Obviously, this being 0.33333. The book is going to say 0.33 because you don't need to round it up because it's 3. Okay, I'll just make I don't know, the only reason I mention this is because if you have also read Gann's work, then you'll be maybe questioning me, saying, well, Daniel, why are you using 6.6 when all the books say 6.7? And that's just the reason. Okay, anyway, moving on. So yeah, this is obviously, let me load up. Oh, I didn't want to lose all that. Okay, cool. So, right, what I was going to talk about here was, let's load up the slide. So, well, this is obviously taken from the slide. So it works in the same way as Fibonacci retracement, with a different set of numbers. Obviously, the numbers are slightly different than our Fibonacci standard numbers. Okay, so what I like to do, okay, is pull the Fibonacci ratios first, because I'm more a Fibonacci trader, but I will pull the Fibonacci ratios first, and sometimes you're going to look back. So what we will do is from low to high. Okay, many people, as going through these examples, we're just going to go simply low to high, and because they have no knowledge of Gann, so you'll just go from low to high and maybe look for the 382 fib. But what you can do is go from low to high and pull your fibs, and then go from low to high and pull your Gann numbers, and just see, has there in the past, okay, obviously when we're going from low to high, when we've gone from maybe this low to this high, I'm really aware that the pools are going to be different, as while you don't have this data, if that makes sense. But what we can do is go from low to high and see, in the past, although we wouldn't have had this pivot high, has there been respect on the Gann numbers? Okay, or has there been respect on the Fibonacci numbers? What has been more respected in the past? I guess you could say, like, without even knowing that it's happened in the past, because when you haven't got this data, you'd have been pulling from this high, okay, and then you could have checked what's been more respected in the past. I hope this is making sense. I'd have to go through some examples, I guess, in a second. But when we go from low to high, we can see, for example, here, looking in the past, okay, the Gann retracement levels here have been respected. I mean, this is the 875. You can see to the last tick before the rise. Okay, so that's an example of respect from a Gann level. Okay, I'm going to load up the chart, and it's really hard. It's just like when I was doing the extensions, it's hard to explain this sort of stuff in a slide. It's easier to just load up the chart in a second and show you. Okay, so this is another example, and this, okay, so just so you're aware, this was OST, this is KNC. Again, from low up to the high, this actually took off higher, but we can see from the low up to the high, again, respect from the 876. You can see the SR levels on the 625 here, and you can then see on the 625 getting the bounce off 625 onto the 0.5, onto the 3.3, onto the 3.3 before, let me just highlight why you bounced here, before you get this trend line. Oh, it's hard with this tool. Before you get this trend line, I can't do it, but nevertheless, you can see what I'm on about. Okay, and then you obviously taken up again, hit the one, and you're off. And another example, and then we'll go over some live examples. And this is basic attention token, from the low up to the high. And this would have been this morning when I was getting this one, from the low up to the high. You can see today, on basic attention token, you did hit the 625, and this actually bounced from here. So will have seen a rise on basic attention token right now, up in price. So those are the Gann levels. It's just so it works exactly the same. Sorry, excuse me, as Fibonacci. Okay, so same as Fibonacci retracement. You're all exactly used to using that by now, I'm sure, but it's just a different set of numbers. Okay, so let's go through some examples of a random coin. I'll type in something completely random. Now, what have we got under cryptocurrency? One paired of BNB. Never traded this ever. Let's just, for the sake of an example, show you what I'd be looking for. So what I'd do first is pull from, well, overall low to the overall high. This one is not great actually because it is obviously it's exactly the same as Matic, where it just kind of fell off a cliff. Who cares? Let's just keep on with it. So obviously from low to high, we can pull first and have our standard Fibonacci on. Okay, and we can say, well, actually, well, this has been respected here on the 886, on the 786. Well, this is really nice respect. I don't think we're going to need to use anything else other than fibs on this example, actually. But then what we could do is go from low to high, put on our Gann numbers, okay, and say, okay, what's been more respected subconsciously sort of in the past? And I would say it actually had been the Fibonacci numbers, okay, rather than the Gann. As you can see, there's a lot of crossover. But there's nothing. Gann's not catching anything else here. So we would literally just stick with our fibs, or I would anyway, because in this example there was really well respected in the past. You can see 786, 786, 786, 786, 786 coming up, 382, 382, 66, 66 coming up, down, bouncing off the 786 here actually exactly. 29% rise, and then coming up to the 0.5, coming down to the 618, and now you're in a bit of no man's land. I think what I'd do here, it looks pretty nice for channel work, something like this anyway, not getting distracted. But yeah, that's the way that I'd be like comparing the two. Okay, so I'd always load up a fib first, because I'm always more drawn to fibs. If fibs are respected, I'd use fibs, if I'm honest. But if there is more respect from these half levels, 33%, etc., then what you can do is, you know, use Gann. So let's load up another random thing. So if I just type in algo land, whatever this is. So another random example here. What we can be doing, okay, is just to start off with, I'll pull from the overall low here to the high. This looks pretty nice. Well, first of all, this is obviously going to be on your fibs as well, but look at that 0.5 that you're bouncing off. Maybe I've just found a nice setup. But yeah, look at that 0.5. Resistance, 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 resistance. Potentially flip now into support, taking out that last low. I think this is a nice setup. I've never seen this in my life, but this looks like it could be pretty nice. Oh, wow. Anyway, let's just now load up the fibs and see which one looks better, of what one we could be like drawn towards to use in the future. So if we put this onto standard fibs, crossover is heavy, okay, but what we can see here, see, you are getting very close to the 125 here. So the 125 is different. The 3.3 is getting support, so you can see support that has came in here on it. And I also see that the 7.5 has been old support. So one could argue here actually that the Gann numbers have been prior in the past more respected than the Fibonacci. Thus, we could be sticking with the Gann numbers here. Okay, if that makes sense. That's the way that I would designate. I know that there's a lot of crossover, but if I can see a little bit of, you know, especially on a large time frame, okay, large time frame, you have to think between this 2.5 and this 1.25, you know, nearly 8%. On a larger time frame, the more levels can be beneficial. So what we can see here is, well, let's just go through this as an example. I'm very intrigued because it does look really nice. So the next thing I would do is put on this. It's already starting to look pretty nice. Yeah, because you've also taken out this low, so there's a swing failure pattern on that low. So what we can see, we've done a 50% retracement. Okay, really simply, we've gone old resistance, even way back here, old resistance flipping potentially into support. Okay, so we're seeing a lot of confluences at this level. We've taken out a major low here, which has also led to a rise. What we could be looking at is the next pullback to trade that up. But let's see what we got on the 15-minute. So on the 15-minute here, we actually have got a low, high, higher low, higher high. So we got some bullish market structure coming into this as well. What we could say is maybe we want to actually take out this major SR here. Okay, because this is old, well, support, resistance. It's still resistance at the moment, so we might say, well, maybe we want to see a close above 3540 on the 15-minute, and then we can, you know, trade this long. So let's go on the flip side from this high to this low. Let's put on Gann numbers. Okay, I haven't quite hit the 0.5 fib. Oh well, fib 0.5. It's obviously a fib and a Gann number. So using the examples that we've gone through today, which pivot would we select? This is obviously the low to the high. This is where the breakdown started on this one, isn't it? Okay, so breakdown really started to get impulsive on this high. So we can go from this high down to the low. And you can actually see on this one, we have hit a 0.5. Okay, so where it got impulsively to the downside, we have risen. Okay, we have risen, hit that 0.5, and we've pulled back here. Okay, so let's say, from what I've gone over earlier, we break this high, we move up. Okay, what we can do is move back one pivot. Okay, that's the way you'd work it. I use this more for when we get through the higher Fibonacci numbers, just so you're aware. But I wouldn't start moving it up if we just break through the 0.5, because obviously we got the Champions channel above it. But that's the way we're working it. Okay, if you start breaking above 786, you got to pull it back another pivot. Okay, let's say you break up, pull it back another pivot, pull it back another pivot, another pivot, another pivot. If you break above, this, let's say the 786 on this last pivot high, well, then you can expect it to be really bullish because it's ran out of a lot of local resistances. Okay, cool. Does anyone have any questions about that? I guess the theory behind this is not hard, because it's exactly the same theory as I've covered with a lot of the others. It's just the difference in numbers. Okay, and I guess, like, if I'm being honest, you are going to be using this with other tools. You're not going to be using on its own. I actually don't, just so you're aware, I don't use the Gann square. I use the Gann square fixed. Okay, but just so you're aware, you can be using this on its own. You wouldn't, if you're using Gann methods, then you're not necessarily going to be using this on its own. You're going to be, you got the whole list of, like, Gann fans, you got the Gann squares. So you might not just use this on its own, but nevertheless, that's the difference between, in the terms of this tool that I've covered, it's the same as fib retracements. Okay, but I guess you are going to be using it with other Gann tools. But yeah, I guess, does anyone have any questions from this, what I've covered today? I would imagine maybe not too much. If not, if no one does, I can go through Bitcoin. Oh wow, look at this. So we just hit 7,900. So this is obviously moving really, really, really impulsively now. This is pretty nice. I guess next target we have to look for is the CME futures gap, which is currently sat at around 7,250. So I would like this gap to be filled. We've not got too much to go. Obviously, we'll move up from here. So we're about 7k. So we only got about 2.5% to go to fill this. Okay, and then we can fill the gap. Okay, and as we know, Bitcoin likes to fill these gaps. So that for me is going to be the next target to the upside, to fill that futures gap, and then see how it goes from there. So what, 7,250? Let's just see if we do have, knowing 7,250 on the standard BitMEX chart here, coming in around these last few highs. I guess on BitMEX, what you'd like it to do is maybe hit 7,300. Yeah, but yeah, one has to expect, this is obviously been a really, really, really impulsive move to the upside, all stemming. Okay, so it's all stemmed from the swing failure pattern. Okay, so this is the reason why we've got this move up. purely it is the reason why we got this move up. No one can say anything otherwise, really, can they? You swing failure the low, okay, and you have to remember this was the low formed over a course of 23 days. Everybody, well, everybody is not the right word, but a lot of people that have longed in this section going to have their stops simply below the low, okay? You come down, you take the low. When you've come down and you get back above it, above here, well, that's showing you a lack of interest in sellers, okay, because if sellers were interested, they want to force this down from here. In combination, knowing that there's so many stops here, there's a lot of sell orders. If you hit all these sell orders, all the breakout traders looking to short, all of the stops, people longing, okay, their stops are obviously buy orders, stops are sell orders. So you've got so many sell orders. If you get all these sell orders and still manage to come back above and hit the way the breakdown started, that's showing you there's a lack of interest in sellers taking over. There's also been a lot of liquidations here, and there's also been a bigger entity that has absorbed. Somebody has, some big account, we're talking, tens of millions, is going to absorb all of the selling pressure here and prices back above. So if someone has absorbed all of that selling, well, clearly they're, buying here to send it higher. So yeah, this was obviously from a swing failure pattern. There's no other reason to think any otherwise on that. But yeah, now I would look up towards that CME futures gap. Frederick, I didn't mention Gann cycles today. I don't know. That wasn't me that mentioned it. I didn't mention it, so I don't know. Yeah, so I would like to talk you through what happened last week on the stream, because last week on the stream was really, really amazing. And this is really good theory, as we can see Bitcoin pushing up here. But I want to show you something that I hopefully think is going to blow your mind, because it did lead to, honestly, a great trade. Actually, yeah, let me talk you through this, because it was truly brilliant. Okay, so this is where we were on the stream. What is that now? 1 week ago, so the 12th, isn't it? So the 12th, the 11th, so the 11th. Okay, we were here in last week's stream. Okay, we were here in last week's stream, sat at around 7,100. And as you all know, I made the call of saying, many people, let's zoom down, because I need to explain this theory, because it was truly amazing. And well, obviously when we were looking at this, when you are sat in this price action, as I was saying, many people are going to have their stops 7,270, 7,370. These are going to be the two places where stops are going to be set. Okay, obviously I made it very clear that I had moved my stop loss to 7,454. Okay, as you all know, after that stream ended, 2 hours after the stream ended, price rised, okay, took out all the stops, 7,230, 7,370, 7,270, 7,370, and it missed my stop loss by $4, about $4, $6 missed my stop, which just felt fully amazing to tell everybody that I'd moved my stop above this high. And then it's because I was expecting this short squeeze. Okay, so obviously I don't normally give myself such wide stop losses if it's not required, but I was under the impression we're gonna see the short squeeze. And why was that? It's because we were moving sideways and open interest was going up. So open interest was going up in a sideways movement. That shows that a lot of positions are opening here. All it takes is to break above the range high. You get everybody that's opened, let's say, onto the wrong side of the market, closing out, getting liquidated, liquidations, rise it. So basically like a little stop hunt, little liquidation hunt. That's the reason why I was expecting this. And then for it to play out exactly as I expected 2 hours later, to miss my stop by $6 was just full on beast amazing. If I'm honest, that was full on amazing. And then look at the pattern that you had from here. I want to show you another reason of confluence, because this has been crazy. And imagine how annoyed you'd be. Imagine if you got stopped out on that and then price still goes down another 13%. You're going to be so mad. So I hope I saved a lot of people off that. But yeah, let me show you another just purely amazing thing that happened after this. Okay, so bit of confluence of this from high down to the low of the wick. 618, you see how it hit the 618 to the exact dollar? So we hit the 618 to the exact dollar. You're thinking, how many times has Daniel shown me this? This is crazy. Okay, let's continue. From the next high down to the low, okay, which would have been this low. So from high to low, 618 down. Okay, then from high down to the low that's formed, price has risen. So from the high down to the low, price has risen, hit the 618 and come down again. So that is now from high to low 618 to the dollar, from high to low 618 to the dollar. Okay, then let's go again from the high to the low. We've come up, we've wicked through it, but nevertheless, you have to think, if you're short in here, your stop's not going to be the other side of the 6-6. It's going to be generally two higher lows back, one higher low, two higher lows. You're safe. So that's 1 CC short, amazing. 2 CC shorts, amazing. 3 CC shorts, amazing. Let's go again. From the high down to the low. Again, hitting into the CC, no closes above, you see, and you fall down again. So that is 1, 2, 3, 4 CCs, which you have hit absolutely perfectly to get this move to the downside. And now let's go over my trades from this morning. Okay, so obviously I was short in this morning, and obviously we're up from here, but I can get out of my shorts and into longs pretty quickly. What we had this morning was obviously the top of the range. So this was the range that I had on from yesterday. That was looking for the range high, and obviously at the time that was your range low. Okay, so range high to range low. If you take another CC from the top of the range to the lower of the range, what we done this morning was come up, wick onto it once, wick onto it twice, obviously then head downwards. Okay, and then from heading downwards, what we obviously done was here from the low up to the high, you've come down to the 1618 extension. And for me, I was not buying, by the way. So I was not buying a 1618 extension. That for me, I don't like to catch knives. And I also would never forcefully even attempt to like market buy to do swing failures. You only react to swing failures. So you have to remember, swing failure patterns cannot be predicted. We could have been aware, as I was and many of the group was, aware that we have the high potential of a swing failure pattern, but you cannot predict and say, well, this is going to happen. You just have to be reactive. Okay, and that is what a lot of trading is reacting to what's happening. So I was not buying here, but when price did reclaim the low, okay, that for me was, a short, a long signal entry. And my average entry, well, I ended 6,550 and then higher again. So the long average for me was 6,600, and now we're obviously sat at 7,100. But that's like the reactions, just so you can see. In hindsight, we can say that's where we ended. I would not buy here myself, especially on Bitcoin when it's so volatile. But when you reclaim that level, then you can acknowledge you're entering a swing failure, and then you can, make the decisions, your trading decisions. But obviously, that's a bullish. It is a bullish pattern to see a swing failure pattern, and obviously this was one. This is a screenshot taken from the group. But you just have to acknowledge that these are sort of like bullish patterns. Okay, bullish patterns, swing failure patterns, 555, 6555. That's when you could really acknowledge you're not catching a falling knife, but when you see it come above on that price, that's when you can acknowledge that you are getting like bullish swing failure patterns. This guy obviously no clue, bullish, it made a lower low. These sort of people need to read up on what a swing failure is. But there you go. So yeah, that's how I traded that today. And also from the last stream. So from the last stream, it's just been pretty well traded, if I'm honest. Obviously, this is the thing in trading. You can't hold buyers all the time. Like this morning, I was trading it short. As soon as you see the patterns go long, you got to trade it long. If you continuously only shorting something, or you continuously only longing something, you're just going to lose, aren't you? So you just have to be quick to adapt and trade the situations that come. Cool. So does anybody have any questions? Wow, this method you show now, I discovered last week, but I was still testing it as if always true, but it's actually a lot of times. Yeah, it's full on amazing, isn't it? It is amazing. Yeah, so if anybody has any questions, just shout a question that you have here. Let's see what Bitcoin is doing right now. So yeah, a few websites that people regularly ask me of like what I'm looking at. A few websites, because these are relatively new websites. If you were around in the space a year ago, for example, you wouldn't have had these websites. But these are some websites I like to look at. So this is Tensor Charts. Mainly like on this website, I like to see, so you can see like heat maps. So we can say our next big orders are 7,200. Got some orders set at 7,200. Doesn't mean they're not going to be spoofed and removed, but we can see where the orders are in the book here. Okay. So this is one section that I like to use, and the other section that I like to use is the stats section, so we can actually see right now prices rising really nicely. Okay, price is rising really nicely, but open interest is not rising so much, is it? So price is moving up, open interest is going down. This could arguably be seen as shorts covering. So if shorts are closing, okay, not new contracts are opening. You can see here 12 million liquidations on this rise. So yeah, that's obviously covering if you're getting 12 million liquidations. On the low of this morning, we had 16 million liquidations. I'd also like to see the funding. It's just really clearly presented. So the funding is getting pretty negative to the downside. So yeah, you can just still envision this like squeezing to the upside. Another website I've recently used, and this one literally this became good like a few weeks ago. They added so many features, so I am a supporter of this website. They just added so much good stuff. And this is obviously XO charts. So here we can just see exactly where the orders are. I like to look. You can see open interest as well in the delta bars. So if we move this up to the 15-minute a second, what I like to see here is specifically the point of control in each bar. You can see exactly where people have bought, where people have sold. You can also see market orders, who's buying aggressively and who's got passive orders in the book. It's just a really nice website. So what I would say here is should find support. So this is your monthly value area low. You got your week, so it's looking pretty decent. You're above weekly open, you're above the monthly value area low, you're back into the value area. One would envision 7,050 should act as good support, and if I'm honest, there's no reason to think this is over. What you're seeing really big buy orders coming in. So again, this is how you can see exactly 1 million plus to less than 20k. So this is where you can see what's retail doing, what are big accounts doing. Okay, so we can clearly see we're getting some really big buy orders actually coming in. Yeah, that's a massively big volume candle that we've just seen there. 207 million. So we've just seen the biggest 15-minute candle in a very long time. 207 million. When's the last time we saw that? It's a long time ago. I'm not going to go back through all these candles, but you can see here, very, very long time ago since we saw that much volume come in. Obviously, this is going to be, you can see here the liquidations. So a lot of people have got liquidated on this move. Okay, but nevertheless, there's a lot of volume to come in. 270 million. What we could say is this is a sign that you have reached a top. If you suddenly see, let's see, there's no guarantee is there, but it's a sign you could be reaching the top. When you get these blow off tops, it's either a sign of continuation or a potential top that's come in. So we have our monthly point of control coming in at 7317. This could be a potential resistance. That would be, well, you got your CME futures gap. You got to be looking 7260-ish. It'd be nice to fill that gap, seeing as we're already $60 off it. You got the futures gap, and you've also got the monthly point of control just above you, 7317. So you're running into some big resistances. Would be nice to see this continue. It's looking healthy, so it's looking pretty healthy, to be honest. Yeah, so I would like to see that futures gap fill right now, if I'm honest. And then take it from there. Do we fill the futures gap, and do we then start to see a lot of selling pressure, or does it continue on nicely? So far, this is looking absolutely brilliant, So this is going to be one of the biggest dailies that we've seen in a long time. So this already is 12% daily bar. The last time we saw some of these daily bars come in was back in October. This last daily was 12% up, but closed at 9%. So we could see how the daily close goes in 3 hours. Daily close above the futures gap would be pretty bullish. So yeah, that's the next thing I'd be looking at myself. Would be the futures gap. We don't have to 100% fill the futures gap, but it would be nice seeing as we are so close. It would be nice to fill this. Not filled it yet, but yeah, I'd like to fill that, but we'll have to wait and see. And prices hovering around here, it's not looking too bad at the moment. As long as you can maintain around 7,100, even if you pull back to 7,100 and then move up again, it's still absolutely fine. There's no need to jump into shorts too early here. Obviously, this is a thing on the way down. So let me explain this. On the way down, you can be long scalping, long scalps. Let's move up a time frame. So when we come, let's come to the daily for the example. So, you know, when we're coming down, obviously when you're coming down, as you all show, when I show you, we're hitting 618, 618, 618, you're going down, down and down. You know, you can still long the scalps up to there. But what we were saying, like, you know, trade with the momentum that's happening. You know, there's a difference between a long scalp and a short swing trade. So, you know, just like now, if I was looking to short this chart, you know, there's short scalps to be had right now. But the momentum is with the bulls, isn't it? So if we look here at the momentum, what we can say is momentum is with the bulls. Look at this, the highest momentum. It's breaching old, you know, we're reaching really high momentum levels. So you've got to be aware. Short scalps, I wouldn't enter any swing trade immediately at this point. Okay, maybe if you start to come down on heavy volume, you get the next retrace, you could look for the short, you know, stops above the high, for example. But so many times, if you've only been doing that of this rise today, you could have taken so many shorts, for example, thinking the high's in. Obviously I've done some short scalps, but that's exactly what they are, scalps. So yeah, that's all I wanted to mention. So looks like we are getting a bit more selling pressure. Yeah, so 9 million hit market. So you're definitely getting some actually people interested in selling right now. Anyway, let's. Does anyone have any other questions? Dan, when you are pulling your fibs on higher time frames, would the levels from the higher time frames be the same on the lower time frames? Well, they would be the same levels if you're zoomed out so far. So obviously, if we're looking at the 12-hour time frame, say, well, the 12-hour time frame, I'd say this is your high to low. Okay, resistance 7726. Okay, around there if I lined it up exactly. But then obviously when we come to the 15-minute chart, okay, we could have our last pull, for example, on this high to this low. Okay, or we've breached this, so we could come up to the. Okay, so you know, this is the way that you'd be working it. So you'd say the 12-hour one you might say is 7,200, and on this lower time frame you've just hit the 618 there at 7,200. This is obviously a psychological level as well, and it is a high. So 7,200 is, you know, you can tell why you're getting resistance at this point, but you might have a slight differences depending on your time frame. Yeah, because you're going to have more pivots on lower time frames. So I would say you're going to have slightly different levels on the time frame. When you're trading fibs, as you showed, are you placing stops just above the 618 and then moving on? No. So I never, ever do that. My stop losses are never based off of fibs. I would never, ever base a stop off of a fib. So I would never do that myself. So let's say, for example, I wanted a long the retracement, and let's just say we were looking at the 382 because it's still bullish. So let's say I was thinking of buying the 382 to play like this. I'm not ever going to buy and place my stop the other side of the fib. That's just asking for a disaster. It just makes no sense in my opinion. It's the same as you wouldn't just like short now, stop above the other side of the 6.6. It just makes no sense. You got to use another method for using stop losses. So good question, absolutely it is. But no, I would never base a stop loss off of a Fibonacci number. CME gap halfway filled. Yep, it absolutely was. Closing above resistance of falling wedge would also be nice. So what falling wedge have you got going on here? So I didn't have this drawn as a falling wedge, so maybe I'm not seeing it the same as you. I don't know, maybe I'm not sure how exactly you had your falling wedge drawn, but I don't know, maybe I'm just missing the falling wedge there. But yeah, one has to just acknowledge that obviously today was bullish, but I would say not because of the falling wedge. It was literally because of the swing failure pattern. That's the main reason we've moved up today, in my opinion anyway. Are we on a daily level, Daniel? Let's see. So your last daily, you're above that one, so your next daily would be 7742, but that's should go up to fill the futures gap. Your last one was 7107. So yeah, your next one's 7242, but you're getting some selling pressure in here. Just be aware, you are actually seeing some selling pressure. Dan, don't you think we'll make another move down to create bullish divergences on the daily? No, like if I'm totally honest with you, if it's difficult to say. Are we going to go down and make a new low? Like where we are right now, it's hard for me to give an opinion on if we're going to make a new low. I mean, one has to say the trend is still bearish. Okay, the trend is still bearish until we even take 10,600. All we could do here is relief rally and do this. Okay, so we could just continue with this trend. One has to envision a bit of relief. Okay, so I am envisaging relief. As I mentioned in the group today, swing failure pattern is bullish. I am expecting relief. And while we were sat at around, what was it, about 6,600 at the time, I was saying, well, I am expecting relief. And possibly, you know, it's always a possibility, but I would like to see this go and fill the futures gap. Now it's nearly happened. But nevertheless, I don't like making the predictions of, oh, you know, is this the overall low? Are we going to go down lower? You know, I'm not in the game of predicting. Firstly, I'm more of a reactionary trader. I mean, predictions are nice, don't get me wrong. Who doesn't like to make the predictions? But there's no point in me saying whether we're going to go down and hit 5k right now. In the way that I trade, there's no point in me predicting that until we lose, let's say, 6,800 support, which is obviously, well, our key support around 6,600. If we lose 6,600, yeah, the probabilities are very great that we go down and test new lows, okay, and much lower lows. But if this is actually a bullish swing failure pattern, the rise should be pretty substantial. You know, I guess the rise already has been substantial. We're talking about 12% in a day. But, you know, I don't want to make a prediction of are we going down to new lows because, you know, I need to take it level to, I just trade level to level. So I don't really want to say whether we're going down for a new low. I think we can head up higher before we go down new lows. But if we're looking on the grand scheme of things, okay, there's no reasons to suggest that this is our major low. We're going up to new all-time highs. It's a possibility. It really is, obviously. But until we sort of break this trend, it's just speculation. It's just speculation. So that's all I'd say on that. Yeah, I have a bit of confidence in this being a low on the short term, absolutely, and getting relief. But whether this is the end of a market with a new cycle starting, then it's too early to even think about speculating that. But 12% in a day, let's just concentrate on that. Oh, so you're talking about, so you were talking about on a larger time frame scale, sort of this falling wedge. I see what you mean. Oh, right, so you're looking at this, something along these lines, no? Yeah, that's more like it. So I do see what you mean with that falling wedge. What was your comment? Closing above resistance. Oh, right, so closing above. Yeah, well, yeah, absolutely, that would be brilliant because that would coincide also with taking these old highs. So yeah, you could say major resistance 7,800 still. 7,900, 8k. Close above that, you can get a real relief going. But Dan, do you know any good books on swing trading? Best swing trading book? Really hard question. I'm just always gonna promote people because it's one of my favorite books, to the New Fibonacci Trader. So New Fibonacci Trader is a good swing trading book because it concentrates a lot on fibs. But I think you can, like, I guess like half the reason I'm making these videos is so you don't have to like go and read all the books. Obviously, if you want, then, you know, be my guest, and that's great because it shows you're learning. But hopefully I can teach the majority of all this stuff, you know, saving you all the time of having to do that. But yeah, New Fibonacci Trader. Although it's got deviations to the upside, yeah, I mean it's not perfect, but it's still, I would still say that's absolutely fine falling wedge, especially because the volume fell off. So obviously on this 45% rise, it didn't so much, but especially in this lately, the volume has been really low on that decline. Okay, so volume has been terrible these last few weeks, and so you are seeing a massive, it's a nice start. We're starting to see the start of, the clearly seeing volume come in today, so it's nice. CME gap not filled on BitMEX. You don't have a CME gap on BitMEX, so it only happens on the futures exchange. Okay, so you don't see the any gaps on the BitMEX chart because this this is perpetual swaps. But yeah, no. So sorry. So what you mean? Yeah, the gap has not filled. Oh. No, we got a few dollars from filling it. You're talking about a few dollars. It's not quite filled. So, but this is delayed data, but it doesn't look to me like it's filled. um, can you define the time frames focus of each trading style? Yes, I will. I'm going to try and wrap this up fairly shortly. I'm going to stay on for a few more minutes because I'm kind of eager to trade this, if I'm honest. So I'm going to try and wrap this up. The way that I would define trading styles. So I would say scalp trading is the 1, 3, 5, and 15-minute charts. Particularly the 1, 3, and 5-minute charts are very much scalp trades. The way that I define scalp trade is the setup was identified on, let's say, a 3-minute chart. The scalp trade could last a day because you could get a scalp entry that exceeds expectations and suddenly that scalp trade turns into a swing trade. Okay, but it's classed as, in my opinion, it's classed as a scalp trade because it was identified. Okay, it was identified on a 3 to 1 minute chart. Really, day trading is more 15-minute 1 hour charts. Okay, and then swing trading is 4-hour daily charts, and then your position trades are daily to monthly charts, daily, weekly, monthly charts. That's the way I would define them. And we are getting bullish RSI divergences on daily. Yeah, I'm not really an RSI trader, but yeah. So you have got bullish daily well, I'm on the 1 hour chart. Yeah, you do have big bullish divergences there, with obviously a low made on price, higher low on RSI. So you got some big daily bullish divergences here as well. So yeah, that's nice. I myself don't really care too much for the oscillators, if I'm honest, but yeah, you have. Oh, no worries, Batman. Cool. So that's all the questions that have been asked. So I think I've answered everybody's questions then. There's no more that have come in. I hope that you've enjoyed today's stream. Gone through, obviously, so let's review what I've covered today. Theta chart a week. I think this was just a nice chart a week. The perfection that was one sat away from the stop loss. I just loved it. And then obviously taking profit at the right time, compounding it at the right time, seeing it move up. That's obviously great. Obviously gave the update on the 0.5 Fibonacci levels. So that was last week's stream. If you want to educate yourself on these Fibonacci algorithm pools. Giving you an update on how I'm selecting pivots, not always the obvious pivot. Okay, so today, for example, when I was taking the long on Bitcoin, okay, I guess this maybe a lot of people are going to be selecting here, you know, just an education of not always selecting the high to the low, but, you know, for some of these examples, selecting intraday lows to the highs, okay, and then once the pivots highs taken out, move back one, okay. So for example, we could have pulled from high to low, seen the 618 drop off, but when it breaks through, move back a pivot high to low, and don't always go from the overall high to the overall low. Use some intraday pivots. And then obviously moving on to our Gann levels, which, you know, now you know the theory, you can, you know, test this out yourself. But yeah, I enjoy using this. I use it, if I'm honest, more so on the stock market, but it definitely doesn't hurt to even have both, or at least seeing what's being respected more in the past. So yeah, I hope that you've enjoyed today's stream. The next stream is going to be, well, I want to do, these are the last things I have for Fibonacci, and then we're going to be moving on to a whole separate topic, because I think people are maybe a bit fed up of Fibonacci, but I have left of this harmonics and Fibonacci time. So Fibonacci time is very useful for predicting when a move's going to happen. So we have the time element. Instead of just waiting for a level, we can use time perspective to think, okay, so this is the day it's going to happen, sort of thing. So we got Fibonacci time and harmonics to cover within Fibonacci, and then I'm moving on to something else. So we've been on Fibonacci a long time, but harmonics and time, Fibonacci time left to come. And just so you're aware, yeah, the 25th and the 1st, I'm definitely not going to be doing the streams on these days. I'll do the update of the exact days, but I'm thinking, yeah, the 20th. No, sorry, that will be the 27th and the 3rd. But I'll post an update and updating everyone in the group. Cool. So yeah, thanks everybody for joining me, and hope you thoroughly enjoyed. And I will catch you in the next one. Cheers. And I guess if you want some updates, because I'm going to go and trade this now, if I'm honest, I'll post updates in the group. Okay. So yeah, any updates I will post in here. Lovely setup, by the way. Yeah, that's what I'll do. So if you're interested, just come across to the Bitcoin chat and I'll update you because I'm going to be taking a trade. This is very volatile. So yeah, I'll update in that. Cheers for everybody for watching, and yeah, I'll catch you in the group probably in a few minutes time. Okay, so cheers, thank you, and good night. Cheers, bye.